You are straight up being lied to if you are being told by those that you follow that this has been an easy market to trade. That is a straight up lie. This is not an easy market to trade. Over the past 12 days here, the market has basically done nothing. Last week it was a chop fest. This week was mostly a chop fest. And then we really ended up only down 0.63% from last week. We had 3 strong days off of this and then did nothing but chop. You could make the argument this is a time correction, which time correcting markets historically are stronger. It's not so much of a price correction. This is what I had been looking for, was a reverse type head and shoulder patterns. This right shoulder never really developed in this area. However, it's not that hard to really just extend this and be like, hey, you know what? We're going to set ideally, we set a higher low relative to this low. And, if you want a true reverse head and shoulders, we don't undercut this low, but that really honestly doesn't matter too much. Either way, as long as we put a higher low in, this could be setting up to an actual Santa Claus rally. A lot of people are saying that the Santa Claus rally is dead. That's not true. It's the last 5 trading days of the year of 2025 and then the first 2 of 2026. So the Santa rally hasn't even happened yet. So also, if you're hearing that from people that you follow, unfollow them or at least take their word for the grain of salt, because that's also not true. Now, what are we looking at here? We're looking at the S&P 500. The white line is the 8 EMA, blue line is a 21 EMA, yellow line is the 50 EMA, then this pink line down here is a 200 EMA. All right, you can see that the trend is obviously up. We do have some indecision in the short-term MAs, i.e. the 8 and 21. That shouldn't be surprising, right? However, at the same time, I do have some anchored VWAPs from this low on November 21st and also from the high from October 29th. Right now, the average participant from the market high and the market low is still in the green. This area of 67.97 to 67.83, that area is like the convergence of this high and low anchor VWAP. So we are currently right now in an area of interest. It is also at the inclining 21 EMA. So this is a area of interest for a lot of traders that utilize technical analysis for trades. I don't rely heavily on technical analysis for my entries and execution, but to set up for a broader idea of what are potentials and different scenarios, I do use that for. So this week, basically my message to you is just caution, right? Last week was super boring. Today, the market got hit, SPY got hit, and the NASDAQ got hit. However, at the same time, when we look over at the RSP, the equally weighted 500, and the IWM and the Dow, you'll see that these are breaking out. And also why it might be hard for the market to move forward if tech, as you'll see, is getting hit. It's right here. I updated this up here for you. Tech makes up 34.6% of the overall market. Financials, 13.1%. Consumer discretionary, 10.3%. Communications, 10.7%. Healthcare, 9.8%. Industrials, 8.0%. And then it kind of drops off a cliff with these last 5 here. So these are the 11 sectors here. All right. These guys up here, these top ones, percentage-wise, 1, 2, 3, 4, 5, 6. These guys are mostly the ones that move the market. So you'll see that some money is actually flowing into the other names, which is probably why it's propping up the overall market. But because tech makes up 34% of the SPY, then if that gets hit, the overall market, SPY and QQQs, in particular the Qs, are going to get hit. So these are the names that move the market. I just wanted to put that out there for you. You can screenshot this. If you actually add this up, math doesn't math. It's like 100.2%. That's not my fault. That's Schwab. I got it from an article. So there's the updates for you. All right, so overall, it's not too bad. We just use caution Moving into next week, we could potentially get to selling. Maybe we get tagged the 50 EMA to set a higher low for that right shoulder for a reverse head and shoulder look. That could lead to a time correction / pullback that allows some opportunity to buy into the end of year, leading to a true Santa Claus rally. Now, let's look at the RSP equally weighted S&P 500. Like I was saying, this has really been doing nothing since August. And now it is finally broken out. Sure, we get some selling today. That's not that big of a deal. It's appropriate to take some to ring to register if you are in the green. That's perfectly fine. Now what we need to look for is if we get this retest, if this level holds and then turns back up. If it accepts back within this range and it does not push back out, we could stay range bound. And technically, according to some technical analysis people, opposite end range would be target. So 185 could be target. So we could retest here and push away, or we can come back into the range here, have a quote unquote bull trap, and then tag opposite end. So that's a potential. Let's look at the NASDAQ here. Again, tech makes a huge percentage off of this. So if tech gets hit, this is going to get hit. I left this here because I was educated guess or just scenario. This could have been where a right shoulder could have formed. I'm still looking for the inverse head and shoulders. It just depends on where it's going to form. Anchored VWAP from the low, anchored VWAP from the high. It's converging in this 25 to 65 area. We did close below it. So what that means is the average participant in the market from the highs and from the lows are now in the red. They're underwater. So the pressures right now is actually on the buyers. So there's a risk of getting further selling down as the buyers start to feel the pressure of being in the red. However, at the same time, we are at an area of potential support here. It held here. This was an area of resistance here. We also have confluence with the 50 EMA. So we are at an area of like, hey, we could bounce or we could continue falling down. So again, caution, just be on your toes. Don't catch a falling knife. Here's the equally weighted Qs. Again, equally weighted Qs are again getting hit because it's mostly tech. This is rounding here. Maybe we set a higher low. The anchor VWAP again converging. You see that with the 50 EMA. Area of interest would be 141 area. If we look at the Dow, you can see it's breaking out to all-time highs. If we look at the Russell 2000, we're breaking out to all-time highs. There's the cash index, same thing. If we're looking at XLB, it only makes up 1.7% of the S&P 500. However, what I was saying earlier is, hey, keep an eye out for a potential reversal. A trend reversal, that is specifically because we have a potential double bottom. Here's a neckline. It was retesting here on Friday. We fell back in, but guess what? We pushed back out. So I'm comfortable calling this a double bottom. Look into the names if you want to trade the materials. It only is 1.7% of the S&P 500, so it's not a huge mover, but we do technically have a potential trend reversal here. XLC. Top three names: Meta, Google, I think also technically Goog, GOOG, and then Netflix and Warner Brothers are also in there as well, but I believe that's due to the acquisition there, or at least potential acquisition. Either way, downtrend line broken. It's been time correcting. It's still in an uptrend. It's still holding the short-term MAs. It looks okay. It's just kind of in a box consolidating here. Maybe we get a shakeout one way or the other, but it's literally since last Friday, all it did was chop around in a range. This market's not easy to trade unless you're a range trader. This is not a swing trader's dream, nor really a day trader's dream, in my opinion. XLE makes up 2.8% of the SPY. There's really nothing to spend too much time on. XLF breaking out to all-time highs. So top three names last time I looked was Visa, JP Morgan, and Berkshire. This makes up 13.1%. So money has been flowing into here. This is most likely why the RSP equally weighted S&P 500 is being held up and breaking out. XLI, again, this makes up 8% of the S&P 500. breaking out into all-time highs. There are the top 3 names at last I looked. Either way, breaking out, it's an interesting sector to look into. XLK getting hit. Why is it getting hit? I think it's because larger hedge fund institutions, just the broader public, and companies they're tossing a ton of money and capex into AI spending, and we haven't really seen any results. There's also been news that people are refusing to use Microsoft's AI tools. So the adaptation might be a little bit of a struggle. They're tossing a ton of money in very quickly. People are questioning, like, hey, what are we doing? We probably need to chill out a little bit. So the AI pressures are coming on. And I think this is the way that the overall market is saying, hey, we need to chill out, relax. Either way, at the same time, trend overall, if you zoom up out, it is up. You can see the inclining 200 EMA, 50 short terms, the 8 and 21, they're chopping. The 50 EMA, it's starting to wave a little bit, but either way, it's still chopping. We're tagging it here. We are over the anchor VWAP from all-time highs and from the lows. So the average participant from the all-time highs and from the lows is still above water. They're still green. So the pressures are technically on the shorts here. This is a potential support area. However, it's not proven yet. And so we need to wait until it confirms. One way you could do that, I won't necessarily do this because it's not part of my execution. You could put an anchor VWAP from this high, and then once the price crosses that anchor VWAP from the high, then you would know the pressures on the shorts because they're underwater and buyers are green, basically, right? But either way, this could fall forward further, or this could be an area of support and we turn back up. Let's look at XLP. Honestly, nothing too remarkable. 4.9%. XLRE, nothing remarkable. Utilities. So I did not move this drawing from last week. It just so happens it kind of worked out. This makes up 2.4% of the S&P 500. It failed. Here I was saying, hey, we could have a failure, comes back up into the range and we go higher, or we break down, kind of retest, spend some time, and continue on further. Option number 2, scenario B, looks like it's going to work out. So that would basically, we're probably going to tag the 200 EMA around 42 bucks. 42 is probably going to be target. If it cracks that, then maybe 41. Either way, utilities not looking like longs right now. Let's go to XLV, healthcare. Healthcare looks good. There's absolutely nothing wrong with this selling. We're hitting anchor VWAP from the prior high here. So we can anticipate selling, but if you want to go for a pinch, you can put it at the lows, and as soon as it breaks one way or the other, you can go with that. So for now, it's kind of a no-go, no touch, but we got to bounce right where we basically should have at this prior resistance area that then turned support, and it was also in this area. Top 3 names: Eli Lilly, Johnson & Johnson, and AbbVie. This makes up 9.8% of the S&P 500. So this is also probably why the RSP, equally weighted S&P, is being held up well. And then XLY, last but not least, it makes up 10.3% of the S&P 500. This is mostly due to Tesla. Tesla has been very strong this week, and the relative strength of it has been pretty great. Overall, I'm just, as a breakout trader, I'm waiting for it to break out. Otherwise, you're just trading within range. I know people have been making money on it while it's been in range. Good for them. I'm happy, just not my style. Let's look at Bitcoin. Honestly, Bitcoin doesn't look the best. I still have this bear flag drawn. It's hitting this downtrend line. I have, like, if you ever heard of the H pattern, you get hit and then it rounds slowly and then it drops again. I still think 74, 75 area is a potential target for this. I don't trust it yet. Let's look at biotechs. Biotechs, they remain strong. That's very easy. Short-term MAs, even long and mid-term MAs, they are train tracking. So this is a very strong ETF. It's a very strong area to focus on if you would like to trade that. Semiconductors, we shouldn't be shocked here. It hit prior resistance. We should get some selling. Now we look for a higher low to be set versus here. Where that might be, we don't know. Wait for confirmation. However, this is highly tied to tech, right? And also Broadcom got nailed on earnings last night. And so this should not be a shocker for semiconductors. Let's look at gold. Gold had a gap, got it filled last week, as this week, as I was mentioning last week. We're close to all-time highs. Maybe we tag a little bit more, chop around, and break out. We shall see what actually happens, but overall looks pretty good. Gold miners look good. We have a nice little cup and handle, and then a breakout. We'll see if this retest holds, but overall gold is interesting. I took a trade today in commodity lands for gold. It failed. Which is perfectly fine. The setup was there. Everything was there. It was a great trade. It just did not make money. Silver, I would be mindful of silver. Big bearish engulfing candle on volume here. Silver has gone pretty darn parabolic. It broke out, it had a huge run, nice little cup and handle look. Breakout again. There's a potential for it to be parabolic. There might be a good short in silver coming up. Let's look at natural gas. Has been getting smoked, especially from this high from last Friday. We're down in a week 22.24%. We've been trading this pretty well in our group, which is nice to see. If you look at Boyle is the 2 times. That's been getting hit too. And then there's is the reverse, right? The ultra share short. So that's longing shorts basically. And then oil just bleeds. It's just bleeding. Maybe if we break the 57.10, we can maybe hit 55.96. I don't think, with how honestly boring this is, it's just a slow bleeder. Volatility has not really been there. It's been pretty dead for a good majority of this last quarter here. So nothing super interesting there. Let's look at the heavyweights. Again, the heavyweights are the names that I focus on. These are the names that I trade. I created also something here for you. If you look here, S&P 500, you can go ahead and take a screenshot if you want. Pause the video, spend time on it. And then the NASDAQ, this is the percentage that these individual names make up. So these are the top 10 names in the S&P 500 and the top 10 names in the NASDAQ 100. You can see that the top 10 make up 69% of the NASDAQ 100, which is why it's heavy tech. This is why NASDAQ gets hit more, because it's only 100 names versus 500 names. But out of the top 10 names of the S&P 500, they make up 39% of it. So this is why tech is so heavy. This is why it's 34% right there, 34.6% of the overall market. It's because they're very heavily weighted. So just give you a little preface there. All right, Microsoft, it still does not look good. It cannot get above this prior level of resistance of, let's just call it 495 to 497. There's a lot of supply up here, so we'll see if it gets accepted back in. Either way, it's not a look that you really want to see. It's staying and spending time underneath this 200 level. It's underneath the anchor VWAP from these lows, and it's still underneath the anchor VWAP from these prior highs. So this is not a name I would be longing right now. Sure, investment wise, that's fine. But again, I am speaking to professional short-term traders. NVIDIA, this doesn't look good. You can't tell me this doesn't look good, or you can't tell me it does look good. This, you could make a bear flag case. I say we're probably hitting the 200 EMA. I'm not interested in NVIDIA right now. Apple, I'm still interested in Apple. I've been trying to get into Apple earlier, like throughout this week, but I'm waiting for this 280 level to break and hold. I almost bought today, but I decided not to because I don't like longing when the overall market is as weak as it was today. Now, this is where you find names that are relatively strong, and I'll point them out as we go through. Apple, incredibly strong. It is up green on the day while the rest of the market got crushed today. So it's very tight. We got to wait for a green day in the overall market. I would expect this thing to round up and probably go tag all-time highs. So I am looking and watching very closely to Apple for good risk reward. Amazon, nothing special here. Matter of fact, kind of an potential H pattern. Bounce off the 200 EMA. However, average participant since then is underwater. It's just ranging. Failed breakout. We're probably going to tag 200 EMA at least, if not 213. AVGO got crushed. Broadcom, that is, got crushed on earnings. They're having pressures internally throughout their company and chips and things like that. So they're probably going to head down to this 333 area, accept back into the range, maybe even break it. At that point, we're looking at a, it could bounce in here and chop around. It could also tag this, break below, tag that, and then head down even lower. Or another option scenario that you should be prepared for, breaks below, creates a bear trap, comes back in, and then we go, right? So there's different scenarios that you need to pay attention to and be mindful of and be prepared for. Don't just go pressing buttons without a plan. Meta, I was looking for, I don't know what this is. This is driving me nuts. I don't know why it is. If you look down on a 65, it's not there. So it didn't really do anything today. It didn't work into the gap above. It filled the gap below. I am looking for a gap fill eventually. However, this anchor VWAP from the low needs to hold. Otherwise, this is kind of still looking like a short, but I'm not going to touch it overall. Netflix has been getting crushed again this week, down 5%, 29% from all-time highs. I still think this is going to 82 overall. I'll be looking for an entry on a short position with continued market weakness. Here you go, Tesla, another relative strength. It's been very strong move off these lows since the 21st of November. It is time corrected. It's let the short-term EMAs catch up, and it is pushing higher, up 2.7% on the day, while the rest of the market got hit. That is relative strength. And it was bad news that I think I read sales were down 23% this last quarter or something like that. And it's still up. You guys need to know that Tesla is not just a car company. It is heavily invested in or focused on AI and robotics and energy. So it's not just a car company. If you think that, you need to go read up and learn about Tesla. It's not. And whatever you think, I'll just leave Elon and politics out of it. Anyways, Google, another relatively strong one. I've been waiting for this gap fill. We almost got it today. 303.92 is a true gap fill. It tagged the 21 EMA, bounced off a bit. It's still a strong name. There is a potential we can get down to 291 for this retest of the breakout. I don't like that it's spending a lot of time just chopping sideways. I don't like that it undercut these lows, accepted back in, and then continued to break down here, or not really break down, but sell down into this. So it's not looking super, it's still a strong name, but it's not looking as strong as it was. CrowdStrike, this is nothing in particular. It's just chopping around. It's not good. Now, ServiceNow, nothing in particular. Palantir, pay attention to Palantir. I have been looking for an entry in Palantir. However, this overall market just has not given me the opportunity yet. We are tagging the top of this range here. Very strong move off the 40s tag. Anchor VWAP is right here. The average participant from all-time highs is above water. That is where the bottoming tail today, we have 2 days in a row of pretty strong hammers. Tag a lot of confluence in this area. Anchor VWAP from all-time highs, the 21 EMA, and pretty darn close to the 50 EMA. So we have a lot of confluence on where we got support today. What I am looking for on a shorter time frame, I have this downtrend line forming. So this right here could be the higher low versus this, and we get a breakout of that on Monday. I am looking for a trade on this on Monday for a potential breakout. The indicators that we use in our trading group and trading room show that this has become a very strong name. And there's some news that more government contracts are coming out. I think it's like a 44 million contract they just got from the government this past week, something like that. So either way, I am looking for Palantir trade next week. That is, as long as the overall market participates. Hood, this one started out strong. It was time correcting. I was watching for this anchor VWAP area for potential support. I took my shot at it with a very tight risk reward area, and I got tagged out for a small loss. It's fine. This is why we respect our stop losses, though, because it was down another 3.14%. And with the size that I trade, that's a lot of money. So just reminder, manage your risk and respect your stops. They are there for a reason. So Hood, it's not the best look right now. I would love for it to get back over this Friday's high of 125.65. So I will probably not touch it. So next week, there's really just two names that I will personally be focusing on with market strength. Number one, Apple. Actually, I lied. 3 names. Number one is Apple. That's on, it's a tight second with PLTR, Palantir. So Apple, Palantir, and Tesla, these are my focus for next week. Tesla is on a breakout watch. Apple is on a breakout and retest with a continuation watch, and Palantir is also on a breakout watch. All right, hopefully that is valuable for you guys. Do your homework, prepare. If you guys have any thoughts, ideas, go ahead and feel free to comment below, share, connect. Maybe if you're interested in trading with a professional community, you can always reach out to us. Serious traders only, all due respect. Do your homework, prepare well, and trade well. We'll see you next week. Later.